Welcome to the deep dive. Today we're zeroing in on Land and Houses Public Company Limited, LH. Yeah,
That's right, LH, a major player in Thai real estate.
exactly. And we've gathered quite a bit of info, their latest earnings, analyst takes, their own plans, some history too.
Right.
I want to really understand what's going on.
Yeah, try and get the full picture. What does it mean for them and maybe the wider market?
So what do we got lined up?
Okay, so we've got their Q1 2025 earnings, and spoiler, there was a noticeable dip in profit there.
Okay.
We've also got the latest on their dividends, past and present, and interestingly, potential asset sales. They might be selling some U.S. apartments.
Oh, right. To boost the numbers, maybe.
Potentially, yeah. We'll get into that. Then there are the analyst views, kind of mixed, actually. Some see it as a good long-term dividend stock.
But others are maybe less optimistic.
Exactly, more cautious on growth. We also have LH's official 2025 business plan, their targets, how many new projects, or how few, and some older analysis just for context, background on their strengths, how they usually operate.
Great. So for you listening, we'll break down these challenges LH is facing, their strategies, and why the experts seem a bit divided, especially on dividends versus growth.
Right.
Okay, let's dig in. That Q1 2025 performance seems like the place to start. The headline number, 837 million BAT net profit.
Yeah, which sounds okay in isolation, but it's down 32% compared to the same time last year. And, get this, down 68% from just the previous quarter, Q4 2024.
Wow, okay. That's a steep drop. What's driving that?
Well, according to the BLS analysis, Bolong Securities, a big part of it was lower than expected sales. They came in at 2.7 billion baht.
How does that compare?
That's down 40% year on year. And the real kicker seems to be their low-rise projects.
Your bread and butter, usually.
Pretty much. Sales there dropped 41%. So yeah, the core property development side took a real hit.
Okay, that explains a lot. But wasn't there something slightly better in the mix? The profit margin.
Ah, yeah. Good point. The gross profit margin on the real estate side was actually a bit better than BLS expected at 26%.
So higher than expected, but how does it stack up historically?
Well, it's down about 140 basis points from last year, but up 160 basis points from the previous quarter. So a little bit complex there.
Right, not all bad news on the margin front, but still down year on year.
Exactly. And despite that slightly better margin, BLS still called the overall Q1 performance, well, disappointing. They're expecting things to stay weak for a bit.
Why is that? What's the thinking?
It boils down to, shaky consumer confidence. People are uncertain about the economy.
Right. Macroeconomic worries impacting housing demand.
Precisely. BLS specifically mentioned that high-end buyers seem to be delaying decisions, holding off.
Which makes sense in uncertain times. Did LH themselves comment on this?
They did. In their own statement, they acknowledged overall weak demand, particularly looking back at the first 10 months of 2024.
What kind of numbers did they mention?
They talked about a 10% drop in property transfers in Bangkok and the surrounding areas. And for low-rise transfers, it was even worse, down 22%.
Okay, so the slowdown isn't exactly new news for them.
No, seems like it's been building. And interestingly, on the supply side, new housing launches in the Bangkok area actually dropped by about 40% year on year in 2024.
So developers were already pulling back quite significantly.
Yeah, seems like a reaction to that softening demand, LH included, presumably.
Okay, so that's the backdrop. What about looking ahead? What's their outlook for 2025?
Well, they see some potential positives. They're banking on maybe 2.9% economic growth for Thailand,
Okay.
and the possibility of interest rate cuts later in the year, which could help borrowers.
So some potential tailwinds.
Okay.
But are there still concerns?
Oh, definitely. They're very aware of the pressure from rising NPLs, non-performing loans.
Right, bad debts.
Yeah. And still very high household debt levels overall.
Which means banks are being careful.
Exactly. Stricter lending standards, so even if rates come down, getting a mortgage might still be tough for some buyers. It's a mixed bag, really.
Okay, the challenging environment then. How are they planning to navigate it? What are their actual targets for 2025?
They've set a target of 23 billion baht in bookings, or pre-sales, and 20 billion baht in actual property transfers, so revenue recognized.
Given the Q1 numbers, hitting those seems ambitious. They'll need things to pick up significantly, right?
Absolutely. It implies a major acceleration through the rest of the year. And what's really telling, I think, is their plan for new projects.
What's the story there?
They're only planning to launch 4 new low-rise projects in 2025.
Only 4. How does that compare to last year?
Last year, 2024, they launched 12 projects. The value is also way down, about 11.2 billion baht this year, compared to nearly 31 billion last year.
Wow. Okay, so that really signals a shift, doesn't it? Focus on selling what they already have.
It screams clear existing inventory. Yeah. Destocking seems to be the priority.
And the few new projects they are launching, where are they focused?
They're sticking to mid to high-end detached houses, using their established brands like Sawali, Nantawan, VIV.
Targeting maybe the more resilient buyers.
Seems like the strategy.
Mm-hmm.
Focusing on Bangkok, the surrounding areas, and also Phuket.
Makes sense. Are they relying on anything else besides property sales?
Yeah, they're also aiming for about 9.2 billion baht in revenue from their rental properties this year. Hotels, apartments, that sort of thing.
So diversifying income is important too.
Very much so.
Yeah.
And this brings us to that interesting point about the U.S. asset sales.
Right. The apartments. Tell me more.
So the plan is apparently to sell 3 apartment buildings they own in the U.S., aiming to get it done within 2025.
Any idea of the value?
The total value they're looking at is around 12 billion baht. And they expect a pre-tax profit of about 700 million baht from just one sale in the first half of the year.
Okay.
And maybe around 1 billion baht in total profit from all 3 if they pull it off. That could definitely give their bottom line a lift.
Yeah. A nice potential boost separate from the core property sales struggles. Does this signal a change in their U.S. strategy?
It seems so. They've mentioned adjusting their U.S. portfolio to focus more on hotels now and less on apartments.
Why the shift?
Potentially due to, post-COVID trends, more work from home might be impacting apartment demand in some U.S. markets.
Oh, okay. That makes sense. Are they doing anything else on the rental hotel side?
Yes, they're opening a new 5-star hotel in Bangkok, the Grand Center Point Lumpini, that has 512 rooms.
When does that open?
Early 2025, so it should start contributing more significantly to revenue in the second half of the year.
So multiple levers they're pulling: inventory clearing, rental income, asset sales, new hotel.
Trying to balance things out, yeah. And one more thing on the financial side, they're planning to issue 12 billion in debentures.
Okay, new debt, or replacing old debt.
Mainly to refinance existing debt. The goal is to actually reduce their net debt to equity ratio.
What are they aiming for?
They want to get it down to around 1.0 by the end of 2025. It was about 1.3 at the end of 2024, so strengthening the balance sheet.
Got it. Okay. Quite a few moving parts in their strategy. What are the analysts making of all this? You mentioned mixed views.
Yeah, quite divided, actually. Let's start with BLS again. We know they were disappointed with Q1.
So are they telling investors to sell?
They are. They've got a sell recommendation and a target price of 3.50 baht. Pretty low.
Wow. What's their reasoning?
They're basically saying, look, wait for clearer signs of recovery in housing demand, especially for those low-rise projects, before jumping in. They seem very focused on the current headwinds in the core business.
Okay. Very cautious then. What about the other side? You mentioned InnovestX.
Right. InnovestX Securities. They have a buy recommendation. Their target price is 6 baht.
Quite a difference from 3.50. What's their thinking?
Their valuation is based on an average PE ratio, and interestingly, they haven't even factored the potential profit from those U.S. asset sales into their main 2025 forecast yet.
So they see upside even without that boost.
Apparently so. Their base case profit forecast for 2025 is 5.3 billion baht, which is actually slightly down year on year before any asset sales. So they must see underlying value or recovery potential beyond those sales.
Or maybe they're putting more weight on the long-term brand, the potential success of these strategic moves.
Could be. It's a clear divergence from BLS's focus on the immediate operational struggles.
Yeah. Any other analyst views?
Yes, Yuanta Securities. They're forecasting a dividend for 2025 of 0.23 baht per share.
What kind of yield is that?
That works out to about 5.6%. And they see it potentially rising to 0.28 baht in 2026, which would be a 6.7% yield.
Pretty attractive yields. What's their recommendation?
They have a buy, but interestingly, they specify it's for speculative investors. Their target price is 4.56 baht.
Speculative. Why?
Well, they do expect profit to recover in Q2 compared to Q1, but they still see it being lower than Q2 last year. They mention weaker demand and higher marketing costs as drags.
So, buy, but be aware of the near-term risks.
Seems to be the message. And another, slightly older, Yuanta note from January 2025 gave a higher target of 6-point-year bait, also a buy, but framed more for dividend investors.
Okay.
They expected the second half 2024 dividend, paid in 2025, to be 0.17 bait, yielding 3.5%. But even then, they flagged challenges like higher selling costs and maybe losing some market share.
It sounds like even within Uwanta, there was some caution creeping in about margins and relying on existing stock.
Exactly. They previously had a neutral rating, so they've become more positive, but the concerns haven't entirely vanished.
So, yeah, really a mixed bag from the analysts. Some focus on the dividend, others on the immediate growth picture, some trying to balance both.
It really highlights the uncertainty, doesn't it? Depends on what angle you're looking from as an investor.
Let's talk more about those dividends. You said LH has a history here.
Oh, yes, a long history. They typically pay dividends twice a year, which is a big part of their appeal for income investors.
And the latest one.
The most recent ex-dividend date was April 30th, 2025. That was for 0.17 bait per share.
And when do investors get the cash?
Payment date was set for May 21st, 2025.
Okay. And you mentioned yields earlier. What was the reported yield recently?
As of mid-May, the reported dividend yield was around 7.77%. Pretty high.
That does sound attractive. But is the payout sustainable? Is the company stretching itself?
Well, that's the key question. The payout ratio for that last dividend, the one reflecting Q4 2024 earnings, was 70%.
How do they compare?
It's down from 80% the previous year, so they are paying out a slightly smaller percentage of their earnings than before.
Which might be prudent given the profit drop, right? Conserving some cash.
Exactly. It suggests they're trying to maintain the dividend, but perhaps being a bit more cautious about the payout level. Looking back, their dividend amounts and yields have varied over the years.
But the general consensus among analysts is that dividends will likely continue.
Yes, that seems to be the prevailing view. Even with the profit dip, the expectation is they'll keep paying something, which is why it keeps popping up as a potential income play, despite the current business slowdown.
Okay, let's zoom out a bit. What about the longer-term view? We have some older analysis.
Right. A piece from 2021, it highlighted some traditional strengths of LH.
Such as?
Their strong brand name, for one. Also, their build-before-sell strategy.
Can you remind us what that involves?
Sure. It means they typically finish construction before they start selling units. It can build buyer confidence because people see the finished product, but it also means their capital is tied up for longer during construction.
Gotcha. Any other strengths mentioned back then?
Their investments in related businesses, hotels, retail adding diversification, and even back then, a high historical dividend yield was noted, around 8%.
So a solid company historically. But the recent analysis suggests things are changing.
Yeah, the more recent takes, as we've discussed, point to this shift towards clearing inventory, driven by a slower overall real estate market.
And the ongoing challenges are?
Pretty much what we've touched on. Uncertain consumer confidence is a big one, those broader economic headwinds. Increased competition, they even mentioned that themselves, especially in detached houses.
Right. And the potential for continued pressure on profit margins if they need to use heavy marketing or discounts to shift that existing stock.
Okay, so let's try and wrap this up. Key takeaways from our deep dive today.
Well, first, LH is definitely facing some pretty strong headwinds right now. That Q1 profit drop was significant, driven by weakness in their core property development segment.
Yeah, that much is clear.
Second, analyst opinions are really quite varied. You've got sell ratings alongside buy ratings with different target prices, but
the dividend seems to be a recurring theme.
exactly. There's a general expectation that dividend payments will continue, making it potentially appealing for income-focused investors despite the growth concerns.
And third, strategically, they're making some clear moves.
Right. Big focus on selling existing inventory, launching far fewer new projects, and relying more on rental income and those potentially lucrative U.S. asset sales to prop up the overall numbers.
So for you, the listener, what this really shows is the complexity behind the headlines, right? Yeah. It's not just about one profit number. You need to understand the strategy shifts, why analysts disagree, the historical context. It gives you a much richer picture.
And that focus on dividends, even when times are tough for the core business, might be particularly relevant if income is what you're looking for from an investment.
Absolutely. It's a key part of the LH story right now.
Okay, finally, let's leave you with a provocative thought.
Oh.
LH is a long-established leader in Thai real estate.
Big name.
So how might this current strategic pivot, the focus on asset sales, being cautious on new projects, how might that reflect something broader happening in the Thai real estate market overall?
That's a great question. Is this just LH adjusting temporarily to tough times and changing buyer behavior?
Or could it signal a sort of new reality, a new playbook for established developers in Thailand now, something more permanent?
Yeah, is this the new normal for the big players? Definitely something to mull over.